the interest rates being high, so smaller businesses might find it harder to take loans, etc., just to keep them afloat. Because
high grade sipping on me liquor. Girls them a come, them a want, them a take her. Bad man, me a come in, me a wanna take her. Girls them a come, them a want it on the liquor. I steady sipping on my liquor.
The S&P 500 has been making a very good rally, and in my previous video I actually predicted that this rally was going to come because the price was actually heading down, and it headed down to the 61% Fibonacci retracement, and from there it found a lot of support. There was a lot of demand, a lot of buyers stepping in the market. Price headed back up to test the previous high at $461, which is pretty much where it currently is sitting at the moment. So what's actually interesting is that looking at the MACD, there's this dead cross that's forming, and we just need to wait to see if it actually fully establishes. And if it establishes this dead cross on the MACD, then we could potentially start seeing some supply in the market, which will send this price heading back down, as it's recently just broken above this resistance at $459. So we'll just wait to see if this is a false breakout that could effectively send a lot of sellers into the market, basically selling off, bringing the price down to the 23%, and we could potentially see the price bounce back up. So head down to 23% and then head back up to effectively test that again to see if that would be an established breakout, or if the resistance will be strong, that actually brings the price down. So if you then head over to the 3Qs, and the price movement should in fact it's pretty much the same, in the sense that the momentum, the golden cross was established and it sent a lot of momentum sending up to effectively breaking this resistance, the resistance around $387. So we'll just wait to see. Again, just like the SPY, we'll wait to see if this is an established breakout or if this is going to be a false breakout, just because the momentum, even though it's broken out of this resistance, it didn't really break out with a lot of momentum. As you can see, the momentum started decreasing around this area. So this could really be the build-up of, or potentially the build-up of sellers getting around this area, because they say, you know what, this is a good resistance, or this could potentially be a good resistance. So we start getting in. There's a lot of eyeballs that are sitting on this price point right now of $387, and with their contribution into the market, like selling into the market. So this could actually see the price come down to roughly around this level of $354, and that's only potential. And the reason for that is because every time the price has hit this level, it's been met with a lot of demand, which has pushed the price back up. So that is one to watch for. Basically just see what the market is saying and watching out for the 354 level. That's if the 387 level holds up as a resistance and sends this price heading down. So now if I look at the diamond, and again, just like my prediction with the S&P 500, the Dow Jones is actually done the exact same. You know, I was even using the Fibonacci retracement. Even on the Fib, it came down to 78. I mean, that's a little bit extended actually. You know, came all the way down to the 78, but at the 78 point, the price found a lot of demand, a lot of people jumping into this market, and sent this this price sky high, you know, all the way up to test the resistance around $356. Not only testing it, but actually broke above it. I mean, it pretty much just touched it on the 29th of November, and then it gapped above it. The open gapped just around the same level, and there was a close above it. On the MACD, the bullish momentum is actually a lot stronger than on the S&P 500, but again, we'll just need to wait to see if this momentum decreases, goes from a golden cross all the way to a dead cross, and if that dead cross is established, or if it's just momentarily, just until basically the market is consolidating. So again, it's just a waiting game. So looking at what's been announced today, we've got the core CPI and basically CPI announcements. So we just need to wait to see what they're saying. You know, right now they're forecasting at 0.3%, whereas the previous was 0.2%. So how this will affect the market, you know, logically it should actually be good for the dollar. So if we look at the SPY, it should really make the SPY go up, and there's a lot of confidence in the market. A lot of investors getting confident that the SPY is gonna be doing well, you know, but we'll just need to wait to see what the actual is. If the actual ends up being worse than the forecast or even the previous, then this can really potentially start scaring a lot of investors that they'll start selling off, etc. You know, the whole investment game is very emotional. You know, you can't fully control your emotions, because at the end of the day, if things are not going the way you want, especially when there's money involved, things are not going the way that you want, of course you're going to react a certain way. It might be worse than you thought you would react. You might be more impatient and all of that. Or if you've got your emotions on lock, you might be more patient. But either way, we'll just need to wait to see how the market reacts to that. So now if you head over to the article, so Tesla investor Ross Gerber feels the Fed is killing innovation in America, calls for 100 basis point rate cut in H1 next year. Interest rates are way too high. It's snuffing out small businesses and will eventually cause many more bankruptcies and defaults. The Fed is killing innovation in America. I totally agree with that, in the sense that what basically makes the economy go round mainly is really small businesses that they start up and they're contributing. You know, you can't overlook small businesses and their contribution into the economy. You know, usually they will just look at big companies and all of the well-known brands and the well-known companies like the Microsofts, the Apples, all of that, but they're already established. So you got to look at what is coming up now and again. They have more of the flexibility to be innovative, to try new things, to take risks, bigger risks, all of that could potentially revolutionize their industry. Whereas the likes of Microsoft, Apple, they're pretty much established. They're sticking to what works and what's been working for them. So they tend to take a lot less risks, be a lot less innovative. In this case, the interest rates being high, so smaller businesses might find it harder to take loans, etc., just to keep them afloat. Because the way business works, when you just start off, usually 90% of the time you start off at a debt, because you're taking on loans because you want to fund this, you want to fund that, fund ideas and try out new things, etc. But if small businesses are not able to be taking those loans because the interest rates are too high, then they're just going to be snuffed out, you know, and that's it. They can't compete, they can't do anything. So guys, if you enjoyed this video, especially the analysis and the information that's coming to you, if it's helped you, then go ahead, subscribe to the channel, give the video a like, a comment, let me know your thoughts on it. Are you invested in either of these? Thanks for watching, guys. I'll see you in the next video.
High grade sipping on my liquor. Girls them I come, them I want, them I take her. Bad man, me I come in, me I wanna take her. Girls them I come, them I want it on the liquor. I steady sipping on my liquor. Then I tell her me she give her